Good afternoon, traders. It's Mark from the Day Trading Room. It's coming up to 20 past 6 London time on Friday, the 20th of August. Options expiry day, and I've just, excuse me, closed my last position for the day, and I'm just wrapping up the day's action. It's options expiry, so I'll be setting a few alerts in at the extremes in case there's any surprise action later, but barring any of those breached, then I'm packing up for the week. So let's just run through what we got up to today, especially this morning. We opened up at 10 to 25, down a touch, not much on the YM, but a little bit more of a gap on the cash. And overnight range had been relatively wide. We'd had over 100 point overnight range. I'll flick to the overnight for you. You can see we'd had a pretty reasonable overnight range here, up to 10 to 72, right down to a low here of 10. Let's flick back to the trading for 10,167. There we go. It's the dotted yellow. So a reasonable overnight range, but what we'd done is we'd pushed back up to the middle of that range to open on the cash. So it opened about 10,225, but as we traded lower overnight, I had a slightly bias towards the downside because the market's been there before overnight. It's nothing fresh, it's nothing new for it, so it's not going to be a great big deal for it if it does decide to push lower. And of course, we had the 10,200 cash, which is about the 10,180 YM, and the overnight low. So we have plenty of good targets. So we opened out and pushed down pretty aggressively, pushed through a good layer of support from overnight. These dotted purples, as you know, are levels of interest that I've marked from overnight. So we pushed through this 212 level, and I got short. We pushed lower, and I got my first scale off just before it popped straight back up and stopped me out. So that was a scratch trade. That's not a problem. That's what we manage our risk for. We waited again for the next opportunity. The market then pushed up. It couldn't break through this open here, and we pushed down and consolidated here for a couple of minutes. Now at this point, we're not sure what the market's going to do. Is this going to continue like this for the next few hours? Are we going to push up and close the gap? This is the midpoint of the morning's trade. We're waiting for someone to put the cards on the table and commit. We normally do get a reasonable push at the open, so if you can get on the end of it, you know you can get pretty good trade if you can read it right. But a lot of it's down to tape reading and looking at the subtle signals the market's giving you. So at this point here, we were none the wiser what was going to happen. I still had my downside bias, so I was really looking for a downside push. We got this push here, which we didn't get on. We waited, and we saw it bounce exactly to the tick at yesterday's low at 10,196. And now it pushed up, and at this point here, if we'd have started pushing back up towards this high, then I think a long would have been on the cards, depending on how the volume looked, and more importantly how the ticks were looking. At the moment, the ticks hadn't been above zero, which is telling you that the bids are being hit in the stocks across the New York Stock Exchange. That's predominantly the theme of the morning so far in those few minutes, is the bids are being hit. So we've got two ways of looking at it when we get to this point here. This is another turning point. We've still got our 10,200 within range, and there's still a reasonable bit of meat there, and we've still got the overnight low. So there's potentially a decent bit of chunk of market ticks to get from this trade here. So as we push back up, we saw that fail. We saw it turn very quickly, and again attack this low here. The tape sped up. The ticks were looking better. We had some good low tick reading. We're in on the short. We took the short with a stop just above that high. There was a chance, obviously, that it could have popped straight back up, but we're going to take the short. It's worth a go. First target is 10,200 cash, of course, so that was our first scale. And the final target I was going to look was for a flush with a decent low tick reading of minus 1,000, because on the opening drive you want to try and get as much as you can out of it. Now obviously you need to scale out at your levels that are significant to you to manage your risk, but you need to try and squeeze every last drop, and one of the ways of doing that, a good strategy and a good technique to do that, is to use the ticks and to wait until those ticks are at an extreme and then take your close. So I got my first scale at 10,200. I held through this, held down, and we just almost tagged the overnight low before we popped back up. And I have to admit, at this point here, I thought, okay, well, it looks like it's going to push back up and stop me out on my break-even point. Here, I've got one scale away. I'm going to be break-even on the next. I've missed my opportunity, but I stayed with it, and we saw a little bit of tape resistance around this level here. It then curled back over, it pushed through, and on this push through we got the ticks we were looking for, the -1,000 ticks. The volume was a good spike, so this bar here, as soon as that ticks hit -1,000, we were out. So this was our final exit here from that short trade, and it rolled over and gave a little bit more, but that was our exit there. So that was a nice chunk we got for entry there, scale out here, and the final scale out down here. But you need to be focused, you need to be aware of the next trade. I'm still completely open-minded is what we're going to do. If we'd have pushed back up and failed and then really picked up some steam to the downside, I've happily taken the short. We were at some good levels, so there's a reason to get involved. We had lots of levels broken, this 10-200, all sorts of opportunities available to us. So you close the trade and you forget about it and you look at what the market is telling you for your next trade. And the next trade came within a few minutes, which is why you've got to be on your toes when you're at key levels, because you can get two opportunities in one. So we had this overnight low, we came down, and this was the important bar to me. I was out here and I was watching, and we pushed to a new low. But what's the main thing to look at when you're looking for a new low? You want to see those ticks low, and they came nowhere near the low. They were messing around this level here. They weren't showing any signs of weakness that they were before. So at that point, when you see that, you start to think, okay, we could have a potential counter trend push here. Let's be alert. What do? We look for some sort of trigger signal to get in. Now I decided this time to draw a little downtrend line on my ticks and wait for that break. But I want a little bit more confirmation. We're swimming against the tide with this long. We know that we can't hang around with it. We know we've got to get in. We've got to get out. We don't want to outstay our welcome with it. So we want to really try and make sure that there are buyers there that we've spotted. So we get this move here. We get the low ticks. We get a divergence in the ticks. This candle here for me is the telltale candle, because as we pushed up, we broke this downtrend line in the ticks. You can just about see here we broke it, but more importantly, as this candle pushed down and attempted to test this 160 small area of support here, the ticks didn't even go anywhere near the low. In fact, they just came back to test that small downtrend line that we've marked on before pausing. For me, that's it. That's the long. That's it. I'm in. So I take the long, and the stop is obviously below the low of the day. Now, when you've got this long, you know you can't hang around with it. So you've got to look for your first scales and out, second scales and out. We got to the 80 level, and we took our scale, which happened to coincide with obviously the 10-200. So we took the majority of the position off there. We happened to get another push through to the VWAP, and then we took another quarter of the position. So now we're left with a quarter of position. We're not hanging around with this. We are looking for the impulse move. We're looking to get a little bit chunk of the move, but we will hold a quarter. We'll hold a little bit of the position just to see if we've happened to catch a little fake and they're going to push back into yesterday's range. So it's worth holding some with a stop, and of course bring a stop at that point to break even. But the exit point, obviously, we had an obvious exit for our first two scales, the plus 10, which is around the 10-200 level, and this VWAP and this little bit of tape resistance here. So we're holding a quarter, we don't know what's going to happen. We draw our little uptrend line here, great, and we got this push through. Fantastic. High ticks of the day, everything's looking great. This looks like it could push back up to the highs. But then we get the next scenario here. Actually, that high tick reading was on this candle exactly, which is what we're looking for. The next push higher, this is the signal we're looking for. The next push higher failed to make a new high in the tick, even though the market had pushed quite a bit higher. It stalled at this level here and then proceeded to push back down. So as soon as we see that push back down and we see the ticks push back through that tick support there, through the zero level, we take the trade out. And of course, that coincides with our little uptrend here. So really, that was just a little bit similar level to our second scale. So a nice little scalp there, and we wait now and see what happens. So we got this, and this time I sat back. I did two good trades in a row. It's a Friday, it's options expiry. Um, we don't want to get too carried away. So this came down here. We did double bottom here. We did have a divergence in the ticks. It's a fantastic double bottom. Not, I wasn't involved in this one, unfortunately, because it gave a quite a nice move. Um, but I waited until to see what was going to happen after the half 3 point and to see what sort of situation we were in. So after that, we waited and we managed to we started to get this little wedge forming. As you can see, I drew this downtrend line here. We had a good support level here. In fact, at that point, it was around there that my line was drawn, because it was just struggling around there, and I moved it a little bit further down later on as we got this second push. So after this third attempt lower, and the volume was drying off, we were getting little bursts of volume, but the moves were getting smaller. I started to look for a short, to press for a break of this wedge. Now we know we're in the quiet zone, so we reduce the size accordingly, because the risk is slightly greater than we'd like. And every time we push back up here, you notice it would just sit on this trend line. So a nice low risk reward trade is to take this short here, and as you can see, I've still got the ellipses in, the little circles in from my stop. So we had a short here, beautiful first scales. We push to this support. We've got to scale out some. We're not going to put the whole trade on risking for a break of the whole wedge. We need to take some off. So I took some off here, and then the stop gets pulled down. So this is the second area for the stop. So we hold, we wait for our next level. It pushes down again. We just move our, we just continue to move our stop along. We're following this trend line down, and then what we're waiting for is we're waiting for the flush of volume, the break of this low, and the low tick reading to take the final exit. And we got it absolutely perfectly here. Got this good volume, low tick reading out right at this level. So again, a nice trade here. Took that chunk there, and then took a good position there. Fantastic, lovely little trade. What I was looking for, and what I've mentioned several times in a lot of my videos and on the day trading room forum, is this 5 p.m. low, 5 p.m. London time low we keep getting. Now, when you're in this grind situation, you're waiting for the traders with the larger orders to finish their orders. You're waiting for them to finish, and you're waiting for them to just push that last little bit. And for some reason, it happens at 5 p.m. It's the midday, New York time, Eastern Standard Time. It's 5 p.m. London time. Whatever the reason is, there's plenty of theories out there. Won't go into them now, but you get this little tail. So I'm waiting to see this sort of action, a push lower of the immediate push back up, and we got it exactly at 5 p.m. exactly. So this to me is a fantastic place to go long, absolutely fantastic. So it pushes through, and I get long here. I get long immediately here. I know I've got a really good level to put my stop under this low. It's 5 p.m. The ticks have pushed lower. It's worth a go. We've pushed out this wedge. Everyone who was involved in it has probably been flushed out of it, and I sat with it long, but I knew that it was going to take time. This was going to take time. It wasn't going to be a quick trade. But what's the first thing we do? Yes, right, we always scale out at plus 10. First scale at plus 10, and then we leave it. We leave our stop where it is, because we expect there to be another test. This went lower than perhaps we'd like, but of course, look, the ticks aren't even low, so we've got nothing to panic about. We're waiting for this trend line to break. So the trend line broke, and now I'm looking now. If I'm playing this 5 p.m. low, the premise behind it is that we are going to have a longer term counter trend rally to push back into this range here. It may even be the low of the day, I don't know, but that's what I'm playing for. I'm taking some off at a scale. I'm taking some off again at another good level, which of course was this wedge here, this 10-154 level. So we had our first scale here, our second scale here, and I held my last batch, which I've literally just closed at the start of this video, which, as people know, is a good exit point of mine, the VWAP. Okay guys, hope you had a great week. Don't forget to check the daytradingroom.com for this weekend's educational video.